Africa's Beatrice Kajengo, who spoke to Mutiri Ndegwa, who is the Financial Director of Kenya's Tourism Board. Let's take a look.
First and foremost, let's look at the context in terms of the tourism situation, especially between the financial year 2012 and 13. If you look at the trend that we're looking at, or the period that we're looking at, this is from July to June this year. During that period, we've had a number of challenging factors, one of them being obviously the electioneering. You remember initially the election was to be held in August, and then after that it was changed to December, which comprises of our high season, and then the time was changed to March. Obviously, when it comes to the electioneering period, many of the international tourists, they were a bit hesitant. So they were slow in terms of bookings, and that kept also changing their forward bookings. The second thing also is that during this period again, we had the successful general election in March this year. And again also we've seen in our statistics that the period prior to the elections and then during the elections, this is where we had the most significant and biggest drop. For example, in the month of February, we recorded a drop of about 30% as compared to the same period last year. If you look at the month of March, again, a double-digit drop coming to about 26-point-something%, so almost close to 27%. Again, also in April, again, because this is the time when we had the postponement of the results, the announcement of the results, we again also had a double-digit drop. So if you look at those factors, they really contribute in terms of the dip. The other thing also we'll be talking about is that we had some insecurity-related incidences, again, late last year and towards the end of last year, basically. And this involved some incidences in Mombasa, in Nairobi, especially in this area. Then you remember there was a Barago incident, and all these contributed in terms of some of the major tourist source markets issuing travel advisories against Kenya as a destination. The other factor perhaps also we could talk about is the issue to do with the Eurozone crisis, because a number of our traditional source markets, they've been going through some very turbulent times as far as the economy is concerned. And have in mind some of the Mediterranean countries in Europe, like Spain, you know about Spain, you know about Greece, you know about Italy, and so on and so forth. And these countries also, in terms of the performance against the same period last year, we've seen there's been a dip. So
I'd like to follow up on something that you've actually mentioned on the Eurozone crisis, which is of course one of the major markets for Kenya. Now you look at it in contrast to the new emerging markets that you're seeing. We have India, we have China, we have the UAE. How is the performance in contrast to the traditional versus the emerging markets?
Actually, the fact of the matter is that the growth driver for us in this last financial year has been the emerging markets. Because if you look at a country like India, it grew by double digit. It grew by 10% as against the same period last year. China also, there was substantial growth. We also look at the rest of African countries like Uganda, registering a 53% growth over the same period last year. Middle East also registering some very, very phenomenal growth, again also double digit. And we'll say that therefore, when you look at the traditional markets as against the emerging markets have really performed very well. But the base in terms of the total contribution to the overall kitty is still a bit low. So that therefore means that we still have to maintain our traditional markets as we are seeking to grow the pie by reaching out to the emerging markets.
2 points I want to follow up on. First is the UAE, which registered a 53% rise in the period that you're talking about. Why did we see this very big jump? What happened in that period?
What there is that UAE is a short haul from Middle East to Nairobi. As you know, we also have a lot of airlines that are carriers that service the Middle East and Kenya as a destination. We also have our own national carrier, Kenya Airways, is very strong on that route. So I believe that as a result of the destination, Kenya being not too far away from the Middle East, and also bearing in mind that our product is very attractive to the Middle East consumer, that in itself has contributed quite significantly. The third thing also is that we've also been quite aggressive on the ground. We have an agent that we have appointed in the Middle East who's been there for the last couple of years, and we've been ramping up our activities on the ground so that we can grow tourism from the Middle East into Kenya. The other thing also is that a number of Middle East persons are looking at investment opportunities. So we've also had some of them opening facilities in this country. And obviously if they open facilities, then we'll be looking at them also patronizing those facilities and also attracting some of the clientele to come over.
The other one that I wanted to talk about was China, which increased by about 10%. And you mentioned about the whole issue of the aviation. And you have Kenya Airways now having direct flights as of October to Guangzhou. And also when the president was there about 2-3 weeks ago visiting visiting China. He mentioned that they're going to try and pursue direct flights to Beijing. How then will that also now favor the tourism sector?
China is a very interesting market for us because ever since we got the approved destination status way back in 2004, the growth of tourism from China into Kenya has been on double-digit levels. And indeed, in Africa, we're one of the key players when it comes to Chinese outbound market into Africa. Kenya Airways has been flying to China over the last couple of years, but they fly to Guangzhou and then to Hong Kong. But remember that China comprises of very many cities, and it's a very diverse country. We've also been doing a lot of aggressive activities on the ground, especially in the first-tier cities of Beijing, Shanghai, Guangzhou, and so on and so forth, to the point whereby this year we started moving to the second-tier cities, Chengdu, Chongqing, and so on and so forth. But what we'll say is that once Kenya Airways starts direct flights to Beijing, if that comes to a reality, then we'll actually be expanding our market, because we'll no longer now just be looking at flights to Guangzhou via Bangkok, but we'll also be looking at the direct route to Beijing. And bearing in mind that Beijing is a city, is where the government sits, all perhaps the government functionaries will now most likely, when they're flying into Africa, will most likely fly through Nairobi as a hub. So we see that as a very positive thing, very positive direction, and we're looking forward to it.
All right, and finally, what is your outlook as we go forward into this current financial year?
We see that despite all these challenges, we have actually come over the hill. And the reason why I say this is that when you look at January to June, indeed in the month of May and June, we started seeing an upward swing. And June this year, we had a positive growth as against the previous year, last year. Now, having looked at also the strategies that we've put in place in conjunction with our parent ministry, the Ministry of East African Affairs, Commerce and Tourism, we see a very positive trend, and we are therefore quite positively optimistic, especially working very closely with the ministry and also with the private sector.